Okay, so this is the reason why I'm still short term to midterm, at least medium term. I'm still bearish on the charts, and one of the reason why I'm still bearish going into 2023, and that's why I loaded the 2023 February 17th puts, is because of this headline from today or from yesterday. Equity funds suffer largest ever weekly outflows, according to B of A Global. All right. So stock funds recorded the biggest weekly outflow of $41.9 billion in the week of December 21st, with 27.8 billion being withdrawn from ETFs, exchange traded funds, all right, and 14.1 billion from mutual funds. A lot of this, they're saying that this is a tax harvesting strategy, okay, to offset gains on investment throughout the year. So a lot of people are selling at a loss, which is doable. It's a valid kind of explanation. But if you look at this chart, U.S. value fund flows, 4 week moving average, U.S. value. Look at this. Look at this. Look at what's going on here. Okay, so this is why I'm bearish, because this kind of starts. I get that um, tax harvesting, but at at one of the largest recorded outflows that happened this week, probably all happened yesterday when we saw the big dump. All right, so this is why I'm still bearish going into next year, and I'm not just thinking that people are just tax harvesting. I think people are just getting out of the way for the news, the headlines coming out starting in January, where the earnings recession starts hitting and potential earnings guidance starts. Companies started guiding down, especially the big tech sector. All right, so this is why I'm still bearish for at least the foreseeable future. But as always, we're going to play today. Right, we're going to play today, whatever direction the market wants to give us. But I'm still going to hedge, right, and hold on to some long puts. All right, we did fairly well on the January 20 whatever it was, January puts. Okay, if you guys held it through that pump and dump over Monday, Tuesday, Wednesday, or Wednesday, sorry, you got money for them on Thursday, yesterday. Okay, so that's a good thing. That's why I want to have whatever direction we play in the day, we could still use that as hedge, because I think another dump is coming. All right. Now today, of course, was a cool little pump. I get it. Okay. But I'm just gonna say one thing. Number one is that we moved up. We moved up on a bounce, partly because of yesterday's bounce. Okay. We even bounced today off new home sales data. All right. New home sales data is disastrous for what the Feds actually want to see. And their objective is to see everything come down, right? We need prices to come down. Stop buying homes. And guess what? They're going to raise more rates starting in February 1. Now, it'll be 25 or 50. Nobody knows. But at this point, if the economy stays hot, and you got GDP print on Thursday, GDP print was obviously higher, all right, which is the Q3 final revision numbers, which was 3.2, which is hotter than expected, and a forecast of 2.9. That's not a great signal, and I can tell, consumer spending is up, right? Just go to Costco right now. It's absolutely disaster to get in and out of Costco. I get it. And this is the reason why I think the Feds, they're not going to cut rates in 2023. They're going to continue to hike. They will pause. I'm pretty sure they will pause after March, okay, because the Fed fund rate CME is pricing that in. But they're going to keep the rates restrictive, and we're going to see, in my opinion, next year that starts to hit the fan. All right, that's going to start cutting into corporate earnings. That's going to start really hammering the economy down. All right, and so the effects of that is yet to be seen. So that's why I'm willing to throw a little chump change, all right, on long dated puts, and we'll go from there. So we moved up on low volume on the Qs, all right, for sure. I get that. All right, and so I do think we're going to bounce. I do think we bounce a little bit higher. All right, but I think we're going to get rejected really fast. You saw the selling volume throughout the last several days, and this sell volume yesterday pretty significant. And now today just kind of inside bar. We might chop around, okay? But I do think we move up slightly, probably to 270. All right, so I'm going to put an upside target of 270.50 or 270.70 next week. Probably Monday, or we'll probably see that Monday pre-market, something like that, because of, or I'm sorry, Tuesday. All right, but I think we're going to come right back down. All right, so I'm going to put 270 as a target. I will put just a conservative target that we will revisit yesterday's low at 262. Okay. If I look at the week, the Q actually compared, or the NASDAQ compared to S&P 500, relatively speaking, performed worse. Okay. So on the weekly, okay, on the weekly candle, you have a red hammer. All right. And you have pretty good volume, same as last week when we saw the sell down, the rejection here at the trend line at 300. All right. And then obviously dip back down here. All right. Finding some support, but we're still under the moving average 200 on the weekly. Unless we can make it past this at some point next week, maybe we get a little Santa rally of 279. Okay. I'm going to continue to be bearish because we are under the moving average 200. Okay. You may see a retest. All right. It's entirely possible, right? We could see one of these snapback situations, right? That some traders talk about, and then move right back down. Okay. And I think that's entirely possible for the Qs, because the overall tech sector, okay, is just unhealthy right now, right? You look at Amazon, you look at Google. Amazon is at near COVID lows, and didn't really have much of a bounce today. Still at $85, only up $1.46 today. All right. But let me draw your attention to the monthly chart. Okay. So the monthly chart was a bear flag. All right. On the monthly, you have a hanging man last month, and now death candle, and then engulfing candle on the monthly. Now we still have 4 days left on the trading week. All right. But it's there, and that's very apparent. One thing I will go ahead and actually move on to is the Apple monthly chart. All right. Apple monthly chart closed right above the 34 EMA on the monthly. Ooh, this is not looking good for Apple. If Apple cannot maintain that 130, I know over the last twice this week we jumped up, right? We bounced from that 130 mark, 129, right under 130. And look at the weekly candle. We're right here near support, okay? Near support for Apple. And if this level starts failing, right, then bye-bye tech sector, right? Okay, so you look at this, and you can see a likely scenario next week, right? A little jump, maybe 135 or something like that, before it retests the support. But I do eventually think it'll break down as well. Okay. Let's go to SPY. Okay. I know I'm sounding all dramatic here. You look at the monthly candle, 4 days left. If we cannot close, right, or if this can't even resemble a monthly hammer at the end of next week, it could end up being an engulfing candle. All right, going into the rest of the year, going into February, we are dangerously close, right? Just like over here back then, back in October, where we breached, all right, September, October, where we breached the 50 EMA, right? And still, nice little bounce, but coming back down. So for now, as far as the monthly chart goes, we're still under the 20 SMA. All right. When you talk to a lot of the professional traders, they'll always tell you that 20 SMA, right, is until something happens that blows over that 20 SMA, we don't go long. All right. So, all right, let's go ahead and move to the weekly here. Weekly compared to the Q, stronger. I'll give you that. Okay. The S&P for this week closed down 7 points. So pretty much you have a flat week. You have this doji sitting here, a temporary pause in the action. But you look at the volume. You look at the volume over the last 2 weeks, significant, right? More so than your 20 SMA volume. All right. So we know the selling pressure is in. So if you're looking at this weekly chart, sure, I think we can bounce a little bit. All right. I think we could try to retest 389, maybe 389. If we could get past 385, 387, okay, 389, it might get rejected there and potentially move back. All right. I do expect the SPY, all right, to visit at least a weekly SMA 200, which is at 365. So that's my downside target going into next month. Okay, so I'll leave that target there. Next month, not next week. Okay, next month. All right. Going on a daily. All right, daily here, close above a nice green hammer here on the daily, but I'm, you know me, if we're moving up from a down day on a bounce, right? And yesterday and the day before, we rejected the 34. I'm sorry, the 915. I'm sorry, this is the 9 EMA. Okay. So we're rejecting this area and we're coming off a bounce because of whatever reason. And we were really bouncing off no good data. I really think today was a lot of option burns. Okay. A lot of zero DTEs being burned out. Max Pain on SPY this week was 382.50. Guess what? It hit 382.50 like 3 times today before it went to 383. Okay. So that's why I'm kind of suspect about this particular bounce, but I'll play today. Give me 385 rejection, I'll buy more puts. All right. So I think going into Monday, Tuesday, you might see one of these. All right. Might try to test that 9 EMA before heading back down. Okay. So I'm going to put a downside target, like I said, for SPY. My downside target was 375. This week it hit. I think we're coming right back to see it. Okay, at some point next week. Yes, I know I sound totally bearish, but I'm not. I'll play the trend during the day, but from a wider perspective, I'm still looking at the SPY eventually breaking down here. All right. So that's that. Tesla. Okay, nothing to say about Tesla. Closed at 123 near the lows on the day. You look at the volume on Tesla, it's just insane how much volume is coming into the sell side. Look at the monthly volume. The monthly volume over the last several since September has been increasing. So this is a confirmed downtrend. This is confirmed selling. This is not just shorts, although shorts are making money, but the volume keeps going up here. You look at the weekly chart, okay? That's an engulfing candle, just very much like last week. Last week, right? I mentioned earlier this week that this is the support area and it's holding. It's going to hold. Okay. I think the bears or the bulls are going to fight this area pretty strong before it falls into a volume gap and hits a new supply demand zone at 100. There's going to be demand at 100. All right. So bulls are going to hold on to this area pretty tight. Now, I do think, at least for Tesla next week, right, you'll see a little bounce. Okay. I think it'll maybe hit 125, probably under 130 before it actually hits that gap, right? And probably jumps back up like this before moving further down. Kind of a zigzag pattern for Tesla going into the rest of the year and rest of the in January, of course. Okay. So that is Tesla for you guys. Going to the day trading chart here, if we are to look at shorter time frames, so we saw the failed breakout here. Okay. Broke out here, but failed, broke out here, failed, broke out here, failed, and we're right back at it. So if I just go ahead and extend this line all the way across, we are literally stuck here. Okay. Of course, I do get it, right? This eventually is going to break down. It's going to break on the upside. I totally get it. But I don't, I'm just seeing very limited upside. All right. Even though we bounce. So if we look at this, it's just doing one of these. All right. And when it starts falling off here towards the 380, that's where it crashes. If you look at the 30-minute chart, okay, this is the 30-minute chart, and this just looks like one of these to me. Okay, and we've seen this before on a bounce. We've seen this whenever we actually start hitting a supply, or I'm sorry, a demand zone. It's kind of a rising wedge, bear flag, rising wedge, bear flag. Okay. And so far on the 30-minute is just having a lot of trouble with 383, 382. But if, futures look good Tuesday or Monday night, okay, I do think we can see 383, 384. But it's going to have a heck of a time going up here unless there's some good news, right? You guys saw the news today that none of it was good. Not even the PCE. PCE was in line. It was just in line, right? Came in definitely off the highs, but just came in line as expected. So there wasn't much to. I was really, hoping for soft PC numbers, but just didn't happen. And I was really hoping for, really terrible home sales data, meaning that home sales are down, but the home sales were actually kept going, is still increasing, even though while the existing home sales is going down. So that's something that's just it doesn't make a whole lot of sense to me economically speaking. People are taking on very expensive mortgage rates. Okay. So we did this off that data, which is very, very suspicious to me. When we dump like this on jobless claims. Does that make sense? It doesn't make sense, right? Why would we dump on jobless claims this badly, right? This badly, and quite frankly, a little bit of overreaction, even as a bear. But we're pumping or moving up on really good home sales. That's not supposed to. That doesn't make sense to me. So that's why I'm a little bit suspect on today's action. All right. So with that, I think I'm done here. I hope you guys have a great, fantastic Christmas here. Oh. Did I just talk through all that with no screen? Man, that's horrible. Oh boy. Well, actually, I did actually record it on the. Okay. Let me go ahead and end this.